back to the GEX Private Equity Academy podcast. I'm Sri Vanamali, CEO of GEX Management, managing partner of GEX Capital, and the founder of GEX Private Equity Academy. Today, we are discussing one of the most important concepts in private equity investing, the investment thesis. If you've spent any time around private equity, venture capital, or investing in general, you've probably heard the term investment thesis. But what exactly does it mean? And why does every successful acquisition begin with one? Simply put, an investment thesis is the core rationale for making an investment. It is the answer to one simple question: why should we invest in the business? That sounds straightforward, but one of the mistakes I often see newer investors make is confusing an investment thesis with a company description. For example, someone might say, this company operates in a growing industry. That is not really an investment thesis. Or they might say, this company has strong revenue growth. Again, that is simply an observation, not necessarily an investment thesis. An investment thesis explains why investors believe a business can generate attractive investment returns. It connects the opportunity, the risks, and the value creation plan into one coherent investment rationale. When we're evaluating acquisition opportunities, our investment team is constantly asking these questions. Why this company? Why now? And how do we create value? A strong investment thesis should answer all three. Let me give you a simple example. Suppose we're evaluating a home healthcare business. The investment thesis probably would not be, this company provides home healthcare services. That is simply describing the business. Instead, the investment thesis might be, this company operates in the growing industry supported by favorable demographic trends, maintains strong referral relationships, generates recurring revenue, and presents opportunities to improve operations while expanding geographically. Now, we are beginning to explain why the opportunity may create attractive investment returns. Notice something important. A strong investment thesis rarely relies on one factor. Instead, it combines several components: industry attractiveness, business quality, competitive positioning, growth opportunities, value creation initiatives, and an honest assessment of risk. Because no investment is perfect, every investment thesis should acknowledge that reality. One thing I often remind our associates is that inexperienced investors tend to spend most of their time thinking about the upside, revenue growth, new markets, additional services, future acquisitions. All of those opportunities matter, but experienced investors spend just as much time asking, what could go wrong? What assumptions have to be true? What risks could cause this investment thesis to fail? The strongest investment theses are balanced. They recognize opportunity, but they also recognize risk. Another critical component is value creation. Private equity investors are not simply evaluating the businesses for what it is today. We are evaluating what it can become over the next several years. And that is one of the biggest differences between buying a business and making an investment. This is why investment theses often include specific value creation initiatives, operational improvements, technology implementation, sales force expansion, geographical growth, service line expansion, add-on acquisitions, management enhancements. The goal is to identify specific initiatives that can increase the value of the business after the acquisition closes. In many transactions, the value creation plan becomes one of the most important parts of the investment thesis. One exercise I often recommend to our associates is this. Imagine that you have 2 minutes to explain an acquisition opportunity to an investment committee. Could you clearly answer 4 questions? Why is the business attractive? Why is the industry attractive? How will value be created? And what are the biggest risks? If you cannot answer those questions clearly, your investment thesis probably is not fully developed. One thing that you will notice when reviewing real world transactions is that two experienced investors can evaluate the exact same business and reach very different conclusions. And why is that? Because investment theses are ultimately built on judgment. Two investors might identify different opportunities, different risks, different value creation strategies. And that is part of what makes investing both challenging and intellectually rewarding. At the end of the day, the investment thesis becomes the foundation for the entire investment process. It influences diligence, it influences valuation, it influences transaction structuring, it influences post close value creation. And perhaps more importantly, it provides the framework for measuring whether the investment is actually performing as expected after the acquisition closes. So the next time you review a business, do not simply ask whether it's a good company. Ask yourself, why should we invest in this business? Because that is where every good investment begins. Thank you for joining me for this episode of the GEX Private Equity Academy podcast. If you would like to continue learning how private equity investors evaluate real lower middle market acquisition opportunities, I invite you to join the GEX Private Equity Academy Insider List. As an Insider List member, you will receive our complimentary Private Equity Starter Kit, transaction insights, educational resources, and invitations to select live private equity case study sessions. If you found this episode valuable, I would also appreciate if you subscribe to the GEX Private Equity Academy YouTube channel so you do not miss future podcast episodes, acquisition case studies, and other educational content. To learn more or to join the insider list, visit www.gexprivateequityacademy.com. Thank you again for joining me. Until next time, keep asking better questions, keep evaluating opportunities, and remember, do not just look for great businesses, look for great investment opportunities. Thank you.